Is that good?
Oh,
I just got there this year, so I feel pretty good.
it is so
There's some
crazy
guys
how
that
many
love
people
spreadsheets in here.
they think they're making $10,000 a month, and you sit down with them and they're actually making 3. I mean, it's crazy. So I fell into that trap for a long time. When I come up here and I'm like, oh, we were making this much. How is this guy doing what he's doing? And I'm working harder than he is. Mm-hmm. And it turns out he didn't know what he was making. Like even the people that are good enough to calculate for some of their expenses and their taxes, they're not capturing everything. They're not capturing vacancy. They're not capturing. I mean, vacancy is a pretty common one, but you would just be shocked. I mean, one of the big revelations for me has just been how inadequate the investor class is as a whole. Mm-hmm. I hate to sound high and mighty, and I'll be the first one to sit up here and tell you what a mess up I am. And I'll go into detail if you guys want to know how I've messed up.
Doing your loan was easy. Your docs were perfect.
Well, thank you.
10 years, 15 years of doing it, yeah.
But I look out and I try to talk to people, and we have become so irresponsible as a social cast. And we are a cast, and we're not going to be a cast if we don't get real about it. We can't be loosey-goosey, That's a real... I hope that you guys are hearing me and knowing I'm not doing this to make myself feel better. I don't go out and talk anymore unless somebody I know really likes me. I'm telling you this because I truly believe you guys need to imminently make these changes or, or call me when you need to sell your property.
Call me first. Call him second.
I pay $100 more than Andy.
He does. He's got more money than me.
And Russell and I'll finance it for you.
Yeah, Russell and they'll finance it. Actually, you're doing financing there too, so you can probably get financing from all 3 of them. Question for you guys: cash versus debt. Where do you feel like people need to be at? A couple years ago, a lot less.
I'll answer that one first because I think it depends on where you're at in this in your journey.
Yes.
Because when you start, you have to have a lot of debt. Mm-hmm. As you move along, you have less and less. I think most people carry too much, and like him, I don't think there's ever a reason to cash out refi.
Never a time to cash out.
If people are pulling cash, you better have a good, like Rockford said earlier, you better have a good place to put that money.
Yeah, if you've got a use for it, if you're in growth mode and you need every
continuing,
dollar to go into the next deal, it can make sense to do cash out refis and absolutely, use leverage. Just don't use too much.
But the other thing, Sharon and I used to talk about this all the time, and it was you have to make sure when is enough enough. When do you have enough money? How much do you actually need? Because that goalpost will continue to move forever and ever.
That's wisdom.
And if you let that continue to move, then you'll never have enough, and you'll continue to work 60, 80 hours a week until you die. So at some point, we decided that, we can slow down some, not continue to work this much, not make as much. I don't make as much as I probably made 3 or 4 years ago. But I've got to the point where now I've got enough. So I'm never going to spend all the money I have. And so now I can enjoy it more because I don't have to put in that time. So, but with that, it's reducing that amount of debt so that you have more cash flow. Well, that's fine when you're young and you're building, but at some point you've got to say, how long do I want to do this? When's enough?
Yeah.
Because I could do that for another 15, 20 years, but then what am I going to do? I'm going to be too old to be able to travel and go places with my family. I mean, I would rather do that now when I'm quasi-young, even though I'm old now. But no, it's a lot better to be able to travel now and do things. I wouldn't want to wait until I'm too much older to do that. So, but you have to adjust your debt accordingly. Because if you have too much debt, you're never going to get out of that rat race. Yep. You're going to continue. And I've seen it. I see it almost every day. I talk to people that have so much debt that they're working for their debt. And the only one that's enjoying it's the banker. Because he's getting paid either way. Yeah, I like that part. I think you should borrow as little as you possibly can get away with. If you think you could get away with 100, there's no reason to borrow 120. I don't care if you paid 200 for it, if you paid 300 for it. If you only need 100, there's no reason to borrow more. Yeah, unless you have something to do with that extra.
I think it depends on the situation.
I'm pulling money out because I see a future in which we could bleed. And that money is just to lengthen the amount of time I can bleed. It should tell you something. If I were in a healthier position, I wouldn't be entertaining that.
Well, that's growth mode, right? You had a specific use for that money. You're pulling it, you're not.
Because you're going to buy another property.
Yeah.
Yeah, I was just making sure
Yeah.
that when you say no cash out refis,
So,
that
what
is
they're-
kind of not quite.
No, that's where I said it really depends on where you're at in your investment journey. Because if you're at the beginning, you have to borrow money, and even in the middle, you have to continue pulling that money out. But at some point, you've got to say, okay, I'm not going to continue to buy one house a month or one house a week or whatever it is. You say, okay, now I don't have to continue to buy these, and I'm paying the debt down so that I can have real cash flow. Because once you get it paid off, that's when your real cash flow starts.
You're saying, hey, even if I'm going to grow, I'm going to slow down my growth so I don't have to borrow as much.
I think under $5 million, you borrow every dollar you can, and you don't stop, because if you go bankrupt, you're just doing it again. $5 to $10 million, you start to be able to afford yourself a little bit of nice things. I think $5 to $10 million, you put 40% down on everything. And one of the reasons I think you do that is because
If you're putting 40% down, you get non-recourse money.
you bully the banks 100%. I get better interest rates than everybody else by a lot. I get longer terms. I mean, on that deal with Bank First, they issued a term loan, and I told them no on every single term on that loan, right? And they gave
That
me
was
everything
awesome.
I asked for.
And, I mean, I've never financed more than 70% of
And then
them value.
as I got older, one thing that my mentors told me about that I always laughed at, because I believed that there was never an excuse, even at $100 million, not to use leverage if you could make more money than the interest rate, right? That's what you're taught. The amount of peace I felt a month after I paid off my home, and it became real that I had paid off my home, it's kind of hard to quantify. I wouldn't have believed it was a real thing when I didn't have any real debt, when I didn't have autos, I didn't have credit cards, I didn't have student loans. There is just an aspect to your brain runs better. I don't know how to quantify that to people, but that's asset debt. I would tell you on the personal debt side, it's like Americans have more debt now than, in COVID we had an abundance of savings. That was another thing that drove the asset values. Now we have an abundance of debt. The one thing that you can do with 100% certainty right now is address your lifestyle. Business is wonky, but many of you had been to my home. I had a paid off home that was worth over $1 million in Nichols Hills. A lot of you guys have been out there. I sold that fucker and I moved it into a 3-bed house that cost me $900 a month. And it's not because I couldn't afford my $1 million house. It was paid off. It's just because I'm very safe. I start cutting long before I need to cut. If I think that there's a 1% chance, like when I say I'm pulling $300,000 out, because there's a situation in which I could be bleeding. I don't mean bleeding is imminent. I mean that there is a concoction of crazy crap that could happen in this administration that could cause me to lose money. And I am willing to sell my truck and sell my Corvette and sell my house and sell my cat and sell everything but my wife
Can we talk
to make
about
sure that doesn't happen.
cash reserves for just a minute?
Yeah, absolutely.
Yeah, absolutely.
Okay, so I see a lot of investors that have absolutely no cash reserve, right? And that is such a dangerous spot to be. All it takes is, life happens, right? At some point, you're going to be 30, 40% vacant all at once. Just because by sheer coincidence, everyone moves all at the same time.
If the government shut down, Section 8 doesn't pay. I'm
Yeah.
50% vacant right there.
Yeah. So you need cash reserves for that oops, what if, oh my goodness, life happens, right? So if you can't do a deal, buy a property, and still have a cash reserve that can hold you over for at least a couple months, you probably shouldn't buy that next deal. You need to stockpile cash.
The HELOC, solid.
No.
So
The banks can pull those.
70.
a bank can
pull
bank
them.
can shut down a HELOC on a moment's
I saw it in 2008. All these people thought their HELOC was their emergency fund.
And sometimes they can even call the debt you have on them due.
Yeah.
They can call the debt you have on it due. It's not just that they can lock your line, they can also accelerate the note.
They have the control, and so it's
Yeah. So the other thing with HELOCs is
To get my money.
And worse, a lot of them have collateralized your bank account. So without even asking you, they can take money from your savings account and pay off your note. So you might think that you could, yeah.
I usually don't keep. Back when I was shuffling money all the time, I wouldn't keep my money where my loans were because they can pull it.
Yeah, first note somebody selling you a scam is they pitch you like the velocity banking, HELOC, put all your money into the HELOC pitch. I mean, that's your first red flag.
The other side is with a HELOC, even if they don't call it, HELOCs are annually adjustable and annually renewable, right? So every year you have to re-qualify for your loan.
This one like is 10 years.
No.
No.
So it may be a 10-year term.
Oh.
Like it may be a 10-year accrual term, but it's an annually renewable note. Every year your banker is going to ask you for updated
It
financials.
depends on the bank. I know First United over here resets your rate quarterly.
Oh, so it's even worse.
Yeah, and people have lost a lot of money doing that. I mean, I shored up a lot of my business dealings. I did have a partner on a hotel conversion we did in South Dakota, and he invested in that project through a HELOC on his house. And he went in on an introductory rate at 1.9, and he was making a great return off his investment. He was making $600 a month or something in pure profit. He was super happy. And then his rate adjusted to 7.5%. And all of a sudden, if we had a bad month, he was losing $50 and he wasn't happy anymore. And I bought his share out of the property at a discount. He lost. Yeah, you got to be careful with those.
Yeah, I mean they can be useful. There is a use for having that line of credit. Instead of an actual HELOC, I would encourage a business secured line of credit or a secured business line of credit, because a HELOC reports on your personal credit report, right? So if you cap out your HELOC to pull it out to go do a deal, you now have a capped out trade line on your personal credit, and your score drops 50 points.
I will say though, in today's America, the irresponsible are rewarded. So like I'm pretty salty that I refinanced my loans and paid those fees on 10-year money like every year because I knew something was going to happen. And I wanted the fixed rate, and I was willing to pay those fees to hedge my bets. While everybody else got the cheap adjustable rate mortgages, which have been coming due this year and last, and the banks just keep extending them and letting them defer their payments and doing loan mods on them, while all the responsible people end up out here and we're still paying our bills. That's kind of crappy. Like 40-year AMs, but only for people who can't make their payments. Like you're inviting me to default. It's crazy. And on cash reserves, 100%. Like cash reserves are going to be a little bit different based on exactly what your niche is. But for me, in multifamily, I carry enough to put, at minimum, a new roof on all of my properties in cash. And if you, in multifamily, if you have a full 6-month reserve, I'm not talking payment, 6 months operating expenses, 6 months payroll, 6 months property taxes, everything. If you are doing a good job, a 6-month full reserve should let you bleed for about 2 years, 2.5 years. Because you're not going to go to zero, right? You're going to be out there hustling. Maybe longer if you're doing a better job. But there's a lot of people out there that have, 70 units and $100,000 in the bank. You
Can't even replace one roof.
You can't do that. And it's not just your roof. I mean, there's so many things that can go wrong.
And when you're getting loans, like it makes the lenders feel really comfortable if you have cash reserve. If you have no cash reserve, they're always going to be like, whoa, what if something happens?
That's true. Banks will sell their souls for deposits right now, and we've definitely used that. But also, it is kind of just one of these moments, when you get to go and like we had a homeless guy break into one of our 10-plexes, try to cook crack out of the gas pilot light of the water heater, and blew the complex up.
Oh, wow.
How many units?
10. It's 10 units. Not a big deal. But here's the kicker. The insurance didn't want to pay out for 9 months.
That happens.
So we had payments. We had displaced tenants. We had security concerns. We had all these things that we had to pay for. And a big part of why the insurance paid out quickly is you just cross the numbers out and you send them a bank statement and you said, I'm going to do something to you. Do you want it to be consensual or not? And they know. If you don't think your insurance companies and just about everybody in a capitalist society looks at you and measures how much they can get away with, you're wrong.
Yeah.
Do you get lost in rental apartment?
Yeah, you're supposed to if they pay.
Oh, but
Yeah.
They weren't paying. You showed them that you could take them to court and that you could survive.
Yeah, because they say, okay, yeah, you were insured, but, this isn't covered because it was vandalism, or they weren't technically a tenant, or they do anything.
I mean, the insurance company's job is to try to not pay. Right.
Well, they know after the third denial, 92% of people won't come back. Won't do anything after the third time they deny you. And after the first time, it's way too high. It's over 70% of after the first time a claim's denied, nobody will do anything.
Well, and the whole reason he brought it up is because if you don't have the cash reserves, you need the payout. You need to get started, and most
know-
people end up taking that.
Yeah. They may offer you like 50% of what you should have gotten, and you have to take it because you can't afford to not to.
Yeah, 100%.
And just the loss of cash flow, the loss of the income for the time.
What I'm trying to say is people look at cash in the bank and they say it's not doing anything for me. And what I'm proffering is cash in the bank has actually made me a lot of money. Higher insurance payouts, better rates, better terms at banks. Just people not creating problems with me because they know that I'm bored and
Bored with a pocket full of cash.
there is value to cash in the bank. That's what I'm trying to
Yeah,
say.
if you got a few $100,000, you go to a community bank, you say, hey, I can put $300,000 in your bank. You're going to be able to name your terms.
Yep.
Right? If you go to a bank like Chase, $300,000 to Chase is nothing. You got to have a few million before they care about it. Right?
Even then.
And so, but I mean, having 300,000 in the bank can be really it really sets your mind at ease. If you got a 12-month cash reserve, I could make no money for the next 12 months and I'm fine. There's a lot of peace of mind with that.
401k be used as that leverage now.
So there's rules about withdrawals for 401k. So you can draw it, but if you're drawing it before retirement age, then it comes with penalty and tax.
So you won't look at that and say, here's this cash reserve.
So from a lending perspective, we can count, I think, about 50% of a 401k as reserves.
Rockford.
Because that's how much you'll end up with if you pull it.
He made a really astute point. Keep in mind that the amount of banks out there that have a sub, market cap of 100 million. There's a lot of those banks that have less than $100 million, under deposit or under management or under loan.
Yep.
So if you walk into a bank, that sounds like a huge number, right? 100 million is a lot of money. But if you walk into a bank with $1 million or you do $1 million loan with that bank, I'm their problem now. They're not my problem. I'm their problem.
Yep.
I'm 1% of their deposits. If I'm taking a 1% dip on the rate and a picture of the loan officer's wife, or I'm leaving. I'm being extra, but my point is you don't realize actually kind of the power that you have.
So, I mean, they can lend 10x of their deposits, of their liquidity, right?
Didn't they suspend that during COVID? Weren't there no caps at all during COVID?
Unlimited.
Yeah,
Pretty
that
much.
was just.
But yeah, if you got, I mean, if they're say a $60 million bank, because, I know of a particular bank in particular that is a $60 million bank that a lot of investors use. But if you've got a couple $1 million or $1 million in their bank, you're $1 million of their 60. I mean, you've got leverage. You have massive leverage.
Yep.
Because if they're available, if their size drops too much, their legal lending limit drops. And then they've got borrowers that have borrowed more than the new legal lending limit that they then can't do any loans for. Hey, we can't do loans for you. Oh, and by the way, we have to call these two.
One of the things during COVID was really fascinating. All the banks that I owed over $1 million to called me and asked me if I would like to have my terms extended, or what can I do for you, Mr. Cross?
Yeah, exactly.
All my banks that I owed less than $1 million didn't bother to even call me. If I didn't have more than $300,000 or $100,000 in deposits, they didn't call me or bother
They're
me.
like, how's
I've
the
got-
economy? I don't know. Well, my bank's called me 3 times. So.
Yeah.
I've got my loans scattered across 8 different banks, right? And the pro with that is if there's a problem at any one bank, I know I can always jump to another one. But
Yep.
the con is I have no leverage.
Yep.
Because my stuff is spread everywhere. The only bank I have leverage with is the one bank where I have cash, right? And I actually don't get loans from them right now. But I probably need to rethink that a little bit. But
you can
I
also
mean,
just tell them what your CDs are.
yeah, that's true.
People don't know that. They're like, we're offering a 4% CD, and you're like, I want 6%. They'll give it to you if you have enough money.
They won't give us 6.
They won't
Wish
give you
would.
6?
No. I wish they would.
Russell just made that call.
Russell's like, I tried that
I make
one.
those calls all the time. I'm always looking for rate.
That's funny.
I mean, but yeah, reserves can be a massive asset to you. It's the grease, right? It makes everything go a lot smoother, and it gives you peace of mind. So absolutely, especially in a time like right now where there's so much uncertainty, you really want cash reserves. In any time you want some, but if there's uncertainty, you want more. It's because it's what you don't know that you don't know that'll get you.
And jumping banks is great. Like the banks always have better promos for new business than they do for existing customers. So I literally jump banks every year.
Oh, you can also threaten to jump banks and get some free.
That worked pretty well. I went and talked to my banker the other day, and I was like, "Hey, I was talking to so and so, and I was like, they were offering me," and they turned around and immediately was like, "How about this?"
We'll
Gave me
match.
yeah, beat it. They beat it by a half a point, and then beat it by another half a point on acquisitions.
Yeah.
So
because if you've got enough of if you're a large enough portion of their bank, of their book, like they can't lose you.
mm-mm.
It hurts.
Yeah,
So band together with your friends.
That's true.
Go in and say, hey, it's not just me, it's me and Andrew and James Oney and Mike Lewis and Alan Norton. And all of us are looking at establishing a relationship with an investment banker who's going to give us one point of contact, who's going to give us preferred lending rates and priorities. We come together and we leave together. And between us, we have $1 million. We're starting to do that with insurance co-ops. Anybody tired of what they're paying for insurance?
Oh my goodness, let's go. I'm ready.
Okay,
Let me know.
This is the pain of like being first, because I always spend all the money and everybody else gets all the profit. But we've got a rep that we're going to the State Insurance Commission, and we're going to create our own insurance co-op where I get 10 investors to get together and we all sign an agreement saying we're not making claims, under $100,000. And we're going to pay the premium that we would have normally paid into an account, and we're going to self-insure, and we're going to get $1 million umbrella over that, which essentially is $1 million deductible, so it's cheap for general liability and blah, blah, blah. And our premiums are going to be hopefully 80% less than we're paying now, right? Because how many of you guys, like in the multifamily space, I'm not even insured. Like, I'm paying like I'm insured, but I got a 3% wind hail on a cash value roof.
Yep.
It's like I'd have to pay the insurance $20,000 to make a claim.
Yep.
So you're only insuring against a total loss.
Yep.
That's it.
You're just insuring against the homeless guy with a crack pipe. And now I just pay for the heat. I just leave the furnace on for him because I don't want him to start a fire. I leave a little bed in there for him.
Yeah.
And if they're sleeping, they won't wake up before I hit them with a lead pipe. And they'll never be able to limp out of there, I don't do that.
No, wouldn't do
No.
that.
You're being recorded. Dakota.
No, would not do that. No.
Hypothetically.
Hypothetically.
But that's an example of what I'm talking about, working and making money in the cracks. I've heard everybody in this room complain about insurance and not do a damn thing about it, okay? Like, how many of you have, in all the commercial policies, probably residential ones, how, as a percentage, what amounts of them do you think require you to have replacement cost value?
Probably about 80% of the lenders.
80% of them. And so most of you guys
So,
said, well, I can't
correction.
switch to ACV.
All of them say they require RCV, but there's like 3 or 4 of them that I just know if we submit an ACV policy with a high enough coverage limit, then we're fine.
No, I just called them and told them I was going to ACV and dared them to call my note due. And I said, if you place forced insurance on me, then we're going to have a different set of policies. But I said, you're either going to deal with the default or you're going to turn a blind eye to this. And guess what they did?
Mm-hmm.
Nothing to see here. But you have to be a menace. These bankers are not your friends. Go cut their throats.
I want to be your friend. Don't cut my throat.
He's not a bank though. He's not a bank though. That's different.
That's true. I'm not a banker.
Yeah.
I considered becoming a banker.
Yeah. Yeah, I've considered it multiple times. I was going to start a bank, and I was going to do something no other banker does. I was going to answer the phone.
A banker?
That's unheard of.
That's unheard of. That's why you guys make so much money, because you answer the phone.
I have a banker that answers the phone.
You have a banker that answers the phone?
I know, right?
That's awesome.
Does he fund it, or does he answer your call?
Yeah.
So I did bring him a borrower. Then when the borrower asked him, like, I'm just kind of curious, what made you interested in taking on our loan? He's like, well, Rockford sent it to me. It's like, otherwise I would have never looked at this thing.
I would have never called him back.
Yeah, absolutely.
I mean, there's a perk of having a broker that does volume, right?
Yep.
Because the banker knows if I'm sending him a deal, it's something I've already looked at and the borrower should qualify.
Mhm.
So I'm not going to waste their time. If there's no way they're getting a loan, I'm not even going to send it to them.
Yep.
Like I have called him a few times, said, "Hey, you're probably going to say no to this, but what do you think of this?" He's like, "Yeah, we're not doing that." That's what I figured. That's why I just called you instead of sending you a packet.
People always take the path of least resistance.
Mhm.
Like I hire my own appraisal on every large deal I do before I go send it to the bank for a refinance or a purchase. And every single bank says, no, we can't take those. We've got to order it through our AMC. And every single bank caves on it. Had one bank not cave on it. And the one bank that didn't cave on it, when I met the appraiser there, I just handed him the report I already had done. And what do you think he did?
Copied it.
Just copied it.
He's lazy.
Commercial appraisals are a lot of work. So if somebody else has already done all the work,
Yeah, but when I hire him, he works for me. When the bank hires him, he works for the bank. There's a big difference.
Mm-hmm.
but you get to pay for it either way.
Oh, yeah.
And they're expensive.
Yeah.
Yeah. Non cheap.
And they're worthless.
Yeah, you pay for
Don't
like
get me started on a price.
80 of 100 pages are just the same thing they put in every report.
Oh, here's what the city of Oklahoma City did last year.
I know.
You
You
can't-
just invite them over and it's like, hey, do you want to do any work? Or I got a 6-pack of beer in the back of my truck. Like, how do you want to spend this hour we're going to be here?
That's not a bad idea.
Yeah. Here's the CoStar report you're going to bury in your appraisal. I mean, CoStar does a lot of the commercial appraisal. I mean, it's pulled straight from CoStar,
Mm-hmm.
right? I mean, so if you show up with the report, you've already done half their work for them. You know, bring them some coffee. They're going to love you. Your value goes up. I mean, same thing for residential appraisals. Do the exact same thing. If you got a comp report, say, hey, I pulled comps in the area. Here's some comps. I don't know if you can use it or not, but I thought I'd try to be helpful. Oh, you want some coffee? I brought some donuts.
I'll
Yeah.
order your Uber home after this 6-pack.
Yeah.
I mean, it's the how to win friends and influence
Yeah, we're
people
full
thing.
service here.
Yeah.
I mean, an appraisal is an opinion of value. You know, I've had appraisers give values like property is presently listed for $180,000. Like, you know, if the appraiser likes you, suddenly the value comes in at like 210, and then it's so high that the lender says, whoa, 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 whoa. This appraisal doesn't make sense because the value came in too high.
If appraisers knew how to value property, they wouldn't be appraisers, they'd be retired.
Yep.
I mean, I do have some appraisers that are also real estate investors, and you know, they just don't work. They just don't take as many orders.
Yeah. Well, I feel like that's almost everybody in the industry. You know, every single agent, every single banker, I mean, one of my favorite bankers doesn't own any rental properties, and he loans me millions and millions of dollars over the years. You know, my insurance agent, covers millions of dollars worth of insurance. He has no